So hello guys, welcome to today's video. In this video I'm going to share with you one of the easiest strategy that any beginner at all can use to grow a tiny Forex account to any limit he or she wants. Trust me, this strategy is really simple because it's a combination of both pullback and breakout strategy. But however, for you to trade this strategy successfully, you have to watch this video to the very end and then implement every single thing you are going to learn in this video carefully so that you don't go and burn out any accounts that you hold. So that already said, hello guys, welcome to my channel, welcome to Forex, Crypto and Forex. On this channel I mainly focus on sharing tips on how you and I can make money through crypto and Forex trading. So if you don't want to miss out on any of my videos coming up, 2 to 3 videos every week, then I advise you smash that subscribe button, like this video, and tell me what you feel down in the comment section. So with that already said, let's get straight to today's video. Let me share this strategy with you and how you can really make money with it. So hello guys, the first thing to do when you want to trade this strategy is simply, let me just go over to the bigger screen. Okay, the first thing to do is actually drawing your support and resistance level using the 1 hour time frame. So the reason why I said the 1 hour time frame is that as a day trader, I always advise you either the 1 hour or the 15-minute time frame to actually do your analytics. And for this video, I'll go with the 1 hour time frame because it's one of my favorite time frame for drawing my support and resistance level. So the first thing is we are going to draw support and resistance levels. So to do that, you first after going over to the 1 hour time frame, I'll just reset my chart and then drag everything together like this. The reason I'm drawing it together is I want to see the market movement in recent times so that I can get a clearer zone to draw as my support and resistance. Because when drawing support and resistance zone, the main important thing is simply drawing the most available zones because they determine the most movement in the market. So the first one I'm going to draw is actually this one here. So you can see, don't worry, watch this video to the very end because I'll also show you a trade that I executed with this strategy and how the trade and everything went. So first of all, here's my most clearest past resistance area, and then the next one is this area here also, which is a new support area. A new support area being created. So after drawing your support areas, like the next thing you need to look out for is your resistance areas. What are your most recent resistance areas? So the first one is this area here. I'll tell you why I'm using rectangle to actually do all these drawings later on. So okay, so here are the clearest zones available in the market right now if you take a look at it on the 1 hour time frame. So after drawing it like this, so now here's how this strategy works. What you are necessarily looking for is for this market to trade into this rectangle, these shapes that you just drew, and then the market should break out of it before you place any trade. So here is it. When you draw this sort of shapes, like what you are looking for is a movement of the market from, like for example, let's go to the recent time frame on how the market is performing. Take a look at it here. So let's take a look at this particular section here. Let's focus on this section. So draw the whole of your attention to this section here right now. Let me just give it a different color to get your attention. So let your whole attention be focused here right now. So when trading this strategy, the first thing you need to look at after drawing your support and resistance is simply looking at the direction of the market. And if you want to look at the direction of the market, you can see that the market first of all took a counter trend here. I call it a counter uptrend. After getting to this level, then it reversed from here back down again, back down to this area before taking another movement to the up level. So now if you take a look at this strategy carefully, you realize that the market has created one top here, one support area here, but then it broke all of these two by not meeting up on this second support area, nor is this focusing on this resistance area. So meaning that this market has broken out of this area that we just drew. So now for you to trade this strategy successfully, what you are looking at for is simply, for this market, you can see clearly that the market is taking a downtrend here. However, seeing this downtrend doesn't mean you should jump into the trade. So here's how this strategy works. This strategy focuses on getting higher probability opportunities to trade. So if you want to trade this higher opportunity using this current place that the market is, let me go down to the 15 minutes to give you a better view of it. Okay. So now with this strategy, if you are trading the way this market is right now, let me get rid of this line here. Let me just minimize this. Okay. So let me zoom it out again so you can see everything clearly. So with the way this market is moving right now, if you want to trade this strategy, since the strategy focusing on only high probability opportunities, the best thing to do is not to trade this market as a downtrend, not to trade this market as a downtrend because it's going down, but rather waiting for this market to either break out, create an accumulating stage before moving upwards. So what do I mean by an accumulative stage? So what I necessarily mean is that before you follow this downtrend that this market is creating, first of all, wait for the market to break out of this area here and then come down a little bit, then go back upwards, come down, go upwards, hit this resistance level, and then come down again. Let me go back a little bit so you get what I just mean right now. So what I mean is that before you trade this downtrend, first of all, wait for this market to come down here, get to a level like this, go back upwards, retest this area again. It can go in between, and then when it's coming back down again and break this previous area, before you should follow the downtrend. So why did I say this? The reason is that this market you are seeing here could decide to trade back upwards from this level again. So instead of you to follow this market down like this, the best advice is wait for it to break out of this rectangle and then create a movement like this, then went back to retest the resistance area, and on its way coming back down before you should follow the trend. This is because anything can happen at this current place that the market is, because if you can see clearly, the market has broke above this resistance level again before it's coming for a retest. You can see the market has broken out of this resistance area. It broke above this resistance area, which is this rectangle here, before it's coming back for a retest. And for you to make sure that you are not going to fall into this trap of trading at this point, first of all, wait for the market to break out of it before you place a trade. And on the other hand, in case the market doesn't break below and then it decides to, let me change, then in case it doesn't break below but then decide to take a different trend, let me say from here it move back upwards again, don't also fall into the trap by trading it as an uptrend. The reason is that the market might decide to move up to here, pull back down again, or before continuing a downtrend, or on the other hand, it can pull back to this area here, go back upwards again. So if you want to trade this market as an uptrend, don't worry, I'm going to show you an evidence of this strategy in a few minutes to come on a trade I actually took on it. So the best advice, if you, after drawing your support and resistance level, if you want to trade an uptrend, is simply wait for the market. Since the market is inside the rectangle, wait for it to come back outside like this, trace back here again, and then on its way going back up, then you can trade it. The reason why you should wait for this before trading it is because if the market should reverse from here and unable to break below this resistance area again, that is to tell you that the buyers in the market have gained more momentum than the sellers, meaning the market is actually going to move upwards. But on the other hand, if the market should break from here below here, it's simply telling you that the sellers are gaining more momentum. So since the sellers are gaining more momentum, you have to wait for buyers to take the market a bit upward again when it's coming back down before you follow the trend downward. So this is simply the strategy to implement. Trust me, this strategy is the most highest probability strategy that I've used, because it gives you more win, more than losses. The reason is that it requires you to be patient as much as possible, because for you to get all of this mark that I've just shown you, you need to patient, watch the market to create its movement, and then when it creates any of the structures that I just shown to you, then you can follow the trade. But in a case whereby it doesn't create any of this structure, I wouldn't advise you follow the trend either. Like, take a look at this area here. Take a look at this area here. Let me draw the area I'm showing you. The market created a minor resistance on this area. Look at what it did. After creating this minor resistance, you can see that it came, touch it, came back down, touch it again, but it couldn't touch it again. Then it took a serious uptrend. So if you hadn't waited for the second to third touch that are actually drawn over here, meaning if the market touched it here, came back down, and then you place your sell order at this level before, the market would have caught you out. Why? Because when the market got to this area here for the second time, it didn't come back down. That will give you any better profit. But what did it do? It reversed upward. So for safety reasons, wait for the first touch, second one, which is this one here, and then the third one that is reversing before you follow up the trade. If it doesn't create any sort of structure like that, I will advise you stay clear of that trade. So now let me show you a clear example I took with this strategy earlier on today. So here is one of the trades I actually took with this strategy earlier on today. You can see what the market did here. This is the NZD card, which is New Zealand dollar versus Canadian dollar. Take a look at how I watched the market. First of all, the market came upward, it broke out of this resistance area, came back into the resistance area again, and then pushed back upward again. Still, I didn't trade the market direction. Why? Because I didn't believe this pullback will actually continue an uptrend. So what did I do? I waited for the market to come back down again, go back upwards, come back down again before I place the order. And you can see that on the third return here, which is this area here, on the third return, you can see what the market actually did when I placed the order. Just take a look at it. Since the third return, it hasn't been able to come back down again. This is because I was patient enough to wait for the multiple returns before placing an order on it. And if you can see clearly that this was since on Tuesday that I started making this movement. You can see on Tuesday, December 19th, and today is already Wednesday, 20th December. So imagine how long I waited for this trade, and the trade is actually paying off, because if you take a look at the direction, just take a look at it, moving all the way from this area here, to this level here. Just take a look at the number of pips that this market are just accumulated. So if you are patient enough with this strategy, you are going to make more money from it, because I always look at the M symbol in the market before I take the trade. So here is the M here. Let me just remove all drawings. Some of them are necessary. Let me just delete this one off and show you the M movement that happens on this market. So first of all, it broke the resistance area here. I didn't trust it, so I left it. Then it came back into the support area again, and then it broke out of the resistance again, and then I patiently waited for it to create the M symbol. You can see 1, 2, then move back up, or then came back down again to confirm the M movement. And from this M movement was when I placed my order to make sure that I secure the trend very well. So now when placing your order, here's one thing you need to note. You can still despite creating the M movement, there are most cases whereby it might still fail you. Like, I'm going to be honest with you, there are more cases whereby it will still fail you, because not always that every single symbol goes on successfully. So what happens if the market decides to retest its resistance zone again before moving upward? So this way you need to use a very good stop loss system to actually place your order. So here's what I did with my stop loss. Take a look at it here. The last time the market dropped in recent time was this level here. You can see it here. Let me give it a different color, a red color. You can see the market last movement was at this level. So when I was placing my trade, I put my stop loss some pips below it, because I know that in case it should break down again, since the market is strategically creating an uptrend, in case you can see the uptrend, here is this, here is one here, and then here is another high here, higher low here again. So meaning if this market should retest even, it will be difficult for it to break above this previous higher low before moving upward. So for me to make more profit from the market, I had to keep my stop loss below it, so that in case the market should come back to this previous area here where it created the last swing high, this last higher low, it won't get me out of the market. So when placing your trade, also put this in mind. Let your stop loss be some pips below the previous point. And then your take profit, for your take profit, I always advise you put it at a point whereby you know you are going to get the maximum profit, but make sure you watch out for the previous highest point here, and the previous highest point is actually this level in this market. Let me put it here. So for me, I don't consider the wicks in most attempts when I'm doing my things. So in case you see me avoiding the wicks, know that I actually don't consider them much in my trade. So you see, so I put my take profit some pips below the last swing high here, which is the highest point the market has hit in recent time, and then my take profit, my stop loss, also some pips below the last lower high, the last higher low. This is because for me to make more profit from this market, the market might come to retest, and I don't want that retesting to get me out, so I had to put my stop loss a bit below. So in case it should come for retest, I'll still be confident enough that the market will come back into my direction again. So this simply the minor strategy I use, and trust me, this strategy has helped me grow so many smaller accounts, because personally when I started, I didn't have much money to raise to trading. So what I actually did was actually waiting for all of this before actually placing my trade, because I need higher probability chances to make more money from trading. So there's also another pair here that I'm actually monitoring. You can see I'm currently monitoring another pair with the same strategy as well. You can see what the market did. It broke out of here, went back upwards, came down again. I didn't meet it at this first breakout, so I wouldn't count it. So I came to meet the market at this point here, and you can see that here is the last support area that it created, and it hasn't been able to break below it. You see, the market goes, comes, goes, comes, goes, came into it, and then went back upwards. So you can see that there's no clear direction for the market yet. So for me to trade this market, first of all, I'll wait for it to come back and retest, go back upwards again, and then when it's going back upward, then I'll look for a bullish engulfing candlestick or something of such before I'll place an order in this market. But in case I don't see anything of such and I'm seeing a clear movement to the upside, what I necessarily do is that I will use my indicators here. I have two indicators that I normally use, which is the EMA, which is the moving average, and then the super trend. These are the indicators I normally combine for my trade. So let me just remove the drawing. Let me say remove drawings. Remove drawings. You can see these are the indicators I normally use. Let me get back my support area here, my resist support area here. Okay, so these are the indicators I normally use whilst trading. So in case I don't see any sort of good movement here, I'll wait for these two indicators to come into an agreement. From here, you can see that the EMA 20 is telling me that the market is an uptrend, so I should place a buy order. Meanwhile, if I should zoom out, there is a bearish candlestick here about to create. So the super trend is telling me that the market is a downtrend, so I shouldn't place an order yet. So before I place an order is when the EMA and then the EMA is simply the moving average exponential, and then the super trend both come into an agreement before I can place a buy order in this market. So hope you get how this simple strategy works. So in case you don't know how these indicators work, I'll be linking to a video down in the description that you should check out. That video will actually give you more details on how these indicators work so that you can make more money using these indicators alongside the price action strategy that I'm sharing here on this channel. So with that already said, I hope you find this video helpful. Don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section.